What is up, guys? It is Andrew Fessick here today, and I'm gonna have another update on what happened in the markets today. It was quite a wild ride, I'll give you that, all around. So let's just get this day started. So the Dow closed down 79 points, which, yes, it's down, but it was down 780 points earlier today at around noon. And then it started rising again. So I think we see a lot of things come to play here. I think the biggest thing really is yesterday the markets were closed, so people who had their money in read news. After that first sell-off on Tuesday, people were scared, people were fearful, and people panicked this morning, got out immediately in fear that it would fall more, and that just kept happening as a chain reaction. There were things, the Y CEO or no Y CFO, their Chinese tech firm, who was arrested by a Canadian over something with Iran sanctions. I don't know specifics, but that was part of it. Part of it was fears of government shutdown. Not many fears, but there were some. But a spending bill was passed. A short-term spending bill was passed for later on, so that was good. That's part of the reason the market rebounded so much, because it was down crazy amount. And now closed down 0.32%. It was down so much more. It was down 1,500 points in the last two trading sessions. So, at one point this day. So a lot happened. And I think what we really see is panic. It was all panic, and then it got oversold, and people were like, "Oh my goodness, there's no reason to act like we're acting," and started to recover. Things got better. So I think that's the biggest thing. Let me just look through. So really, that's about it. Like, all I can say is I think it was panic. And this really goes to show how we really want to try to keep our emotions out of markets, because it's very easy to see. Another thing is you don't necessarily want to look at the Dow because it's so dramatized. And it's only 30 stocks. It's only 30 companies. And I think that is something to keep in mind. And it's much more volatile, and it's not an equal representation. The S&P 500 was down 0.15%, right? That's probably the best representation of U.S. markets, I would say. On the week, they're down a bit more, but it's still, they've risen. They rose a lot today. It was a wild day for all stocks, but Dow had a wild ride, and NASDAQ also had a wild ride, but it was in the green a little bit earlier, and I think closed in the green. So I think really what we have to take away from today is people panic, and it's very easy to get caught in this domino chain reaction of panic that sets in. And once this mindset of panic sets in, same thing during a boom, it cannot stop rising. Bitcoin, it cannot stop rising. It'll fall, and it's very easy to get caught up in all that euphoria and just buy into it and be like, oh, well, if everyone else if everyone else, excuse me, I'm sorry about that. If everyone else isn't buying, or if everyone else, it's like the greater fool theory or something like that. I just heard about it the other day. It's like, I'm not gonna be the one just buying into the euphoria. And I'm not gonna be that last one because there's some fool after me who's gonna lose, and I'll make money off of their buying. And I think that's something to keep in mind. And on the way up, it's euphoria. On the way down, it's panic, and panic will happen much faster than euphoria in most situations. And I think we've seen that today. We saw that break yesterday really screw the markets up this week, right? Because after a sell-off, after panic, we see a sell-off intensify, and then we have this day off, and people pulled out on Tuesday. People were like, I want to keep my money in my hands because stuff can happen tomorrow, and stuff did happen yesterday. And people in there panicked early on and sold. Asian markets were down, and European markets were down yesterday. So markets were down this entire yesterday as well, and I think that led to increased panic. So I think the takeaway from today is, while there was bad news, while we may start to see the economy slowing, it's very easy to get your emotions caught up into all the news and everything. When if the underlying fundamentals are good, it might not be a bad way to go. Um, and it's very easy to panic. So what I'm trying to say is, try to keep your emotions out of it. And I knew today, I looked at my bank, I looked at my account, I was like, ooh, that's not pretty, that's not a pretty number. Um, and it's very easy to panic, and you just have to be like, short term, long term, it'll go up. Maybe it's 10 years, maybe it's a year, maybe it's 3 months, But like this week's not a pretty week. Last week was a pretty week. So stuff like that happens. So you have to keep your emotions out of it and look at what you truly believe and not panic. Because when you panic, while you need some sort of risk tolerance and know how much you're willing to do there, if you panic, most of the time you're more likely to lose than to win. On big sell-off days like today, or really Tuesday, I love to watch CNBC because there's so much panic and anxiety in their voices. Because they got money in there too a lot of times, and I think you just have to stay calm, pray really, but panic does happen, and we do have to pay attention to look at it as a day, learn from it. If you sold out of panic, you may have made a good decision. I'm not saying it's a good decision to sell out of panic, but if you sold, maybe in the next 3 weeks, the markets aren't going to go through any uprising, and you have made any growth, and you did profit technically off of. You cut your losses early. But I think in general, panicking is not going to work out for the better of you. And one other thing I want to bring up is this thing called a Christmas rally. It's a mental thing. The markets are mental. That is the problem with the markets. Is the markets have a lot in the mental thing. There's a lot of mental phenomenons. Sell in May and go away is one of them. And then it comes back in September and October, and historically those. So a lot of it's all mental. And the panic is part of the reason. The panic and euphoric rises, and panic's on the way down. There's a reason why things get so bad. Because people panic, people don't want to lose their money. So people pull their money out. The next person's like, oh, I don't want to lose my money either. They're going to pull it out. And it's a chain reaction, and everyone panics. The whole market will fall down. But I really don't think that's what's happening today. I think it was a shock, and I think we see that because the markets recovered today. Markets swung way up, and I think really it was like we've oversold. I think I'm gonna say this. I think the markets have oversold. I did think they were a little highly valued, especially tech. Was highly valued, but I think certain tech stocks have fallen a certain amount. And I think markets oversold. I think there's going to be more room in the bull run in the future. Maybe not 5 more years, but maybe another year. Maybe just 6 months. I don't know, but I feel like we're going to get more. The market's going to rise again, is what I'm trying to say. It's not going to be panic. This is not the start of a correction, of a crash. 50%, lose value. I don't think any of that's going to happen off of now. I could be completely wrong, but my gut's telling me, and it just feels like it's oversold, and it will recover. If we're patient, this might be a buying opportunity. I would say this. I'm going to do a stock of the day tomorrow. I'm thinking of doing Apple because they've fallen a lot. Microsoft and Amazon are now worth more market cap than they are. So I'm going to do a thing on Apple. I'm going to analyze Apple most likely tomorrow. Unless one of you guys have a suggestion of what stock you want me to analyze tomorrow, I'm going to do Apple. If you like Apple, let me know. So I'm going to analyze Apple because that might be oversold. I don't know right now. I haven't looked at it. But I'm going to tell you, I think the markets it could be a buying opportunity. Get in now while it's low and make money. If you're patient, you probably will make money. So I'm going to do a thing on Apple tomorrow, unless anyone else has suggestions. And if you have a suggestion, if you think this is a crash happening, if you think I'm out of my mind, let me know in the comments. I want to hear what you think. Tell me why. Don't just say I'm crazy. I want to hear legitimate reasoning why, and if you don't know why, then you have no right to comment. Um, but, and if you have any other stocks you'd rather me do other than Apple, let me know in the comments as well. Thank you for watching. Have a wonderful day.